Hello everyone, welcome back to my channel. I'm Japan Life Hacks. This video introduces many types of receivable and payable. While the list might be lengthy, it's just a collection of various details. Each item itself isn't too complex. Let's take the time to learn each one step by step. Now, let's get started. The first content. Advance payment, advance from customer. It's easier to understand advance payment from the perspective of the purchaser. When purchasing merchandise, the purchaser may prepay a portion of the payment before receiving the merchandise. This payment grants the right to receive the merchandise later. This is treated as advance payment, treated as assets. On the other hand, it's easier to understand advance from customer from the perspective of the seller. When receiving an order for merchandise, the seller may receive some of the payment in advance. Since this obligates the seller to deliver the merchandise, it's treated as advance from customer. This is a liabilities account. Please note that these accounts are only used for merchandise transactions. There are transaction methods like this that allow for more secure merchandise trading by paying or receiving money in advance. Now, let's look at the journal entry of advance payment. Ordered merchandise worth 100 yen, prepaid 30 yen in cash before receiving the merchandise. The journal entry is debit, advance payment 30. Credit, cash 30. Money has been paid, but the merchandise has not yet been received, so we will debit advance payment. Since cash on hand has decreased, we will credit cash in the journal entry. Next, let's consider the journal entries when merchandise is received. Upon receiving merchandise worth 100 yen, 30 yen was treated as advance payment, while the remaining amount was put on credit. The journal entry is debit, purchases 100. Credit, advance payment 30, accounts payable trade 70. The asset of advance payment is eliminated, and the remaining 70 yen is recognized as accounts payable trade. Next, I will explain advance from customer. Received an order for merchandise worth 100 yen and received 30 yen in cash in advance before delivering the merchandise. The journal entry is debit, cash 30. Advance from customer 30. We received cash but have not delivered the merchandise, so we will credit advance from customer as a liability. We received cash, so we will debit cash in the journal entry. Later, delivered merchandise worth 100 yen. 30 yen was accounted for as advance from customer, while the remaining amount was put on credit. The journal entry is debit, advance from customer 30, accounts receivable trade 70. Credit, sales 100. Since the merchandise has been delivered, the liability of advance from customer is eliminated. The remaining balance of 70 yen represents the right to receive payment later, so it will be recorded as accounts receivable. Since merchandise has been sold, the credit side is recorded as sales. The second content. Suspense payment, suspense receipt. First, I will explain suspense payment. For instance, when an accounting staff member provides an estimated amount for expenses like employee train fares or accommodation costs, they use an account called suspense payment. The crucial point here is the estimated amount, which remains an undetermined figure. Suspense payment is considered an asset account because there is a possibility of being reimbursed later. Suspense receipt is an account used when funds are received as deposits or cash, but the reason for their receipt is unclear. Suspense receipt is considered a liability account because there is a possibility of needing to repay it later. Now, let's look at the journal entry of suspense payment. For an employee's business trip, an estimated amount of 1,000 yen was provided in advance for train fares. The journal entry is debit, suspense payment 1,000. Credit, cash 1,000. Given 10,000 yen was transportation fare, but since it's still an estimated amount and the extent of its usage hasn't been determined, it should be recorded as an suspense payment. Now, let's look at the journal entry when the amount for the suspense payment becomes certain. Upon the employee's return from the trip, they reported spending 900 yen as traveling and transportation expenses, and they received 100 yen in cash as change. The journal entry is debit, traveling and transportation expenses 900, cash 100. Credit, suspense payment 1,000. Firstly, the suspense payment account is nullified, so it's credited to offset and eliminate the balance. Next, as expenses for traveling and transportation expenses have occurred, we debit this account. The 100 yen received in cash is debited. Next, I will explain suspense receipt. There was a deposit of 1,000 yen into our checking account, but the details were unclear. The journal entry is debit, checking accounts 1,000. Credit, suspense receipt 1,000. While debiting the checking accounts is clear, it's uncertain what account should be credited. Therefore, although unclear, we processed it under unapplied receipts, indicating suspense receipt. Later on, the details of the suspense receipt were identified as a payment toward accounts receivable trade. The journal entry is debit, suspense receipt. Credit, accounts receivable trade 1,000. The account for suspense receipt is nullified. Since the cause has been identified, accounts receivable trade, which is an asset, will be written off on the credit side. The third content. Deposits payable. Deposits payable refer to a liability account used when holding funds on behalf of employees. For instance, a portion of an employee's salary needs to be withheld for tax purposes. Often, the company employing the individual manages this tax withholding, known as withholding tax. Therefore, during salary disbursement, a portion may be held as in deposits by the company. This is when the deposits payable account is used. Let's consider the journal entries. From a 1,000 yen salary, 300 yen was withheld for withholding tax, and the remaining balance was paid to the employee in cash. The journal entry is debit, salaries expense 1,000. Credit, deposits payable 300, cash 700. We are holding 300 yen of the salary in advance, so we will credit it as a deposit payable. Furthermore, we have paid the remaining balance of 700 yen in cash, so we will credit it accordingly. We will debit salaries expense as an expense account. Let's now look at the journal entry for when the deposit is paid to the tax office. The 300 yen deposits payable was remitted in cash to the tax office. The journal entry is debit, deposits payable 300. Credit, cash 300. Since the liability of the deposit is extinguished, we will debit it in the journal entry. Since cash has decreased, we will credit it in the journal entry. The fourth content. Gift certificates receivable. You can engage in transactions using gift certificates issued by shopping districts or local governments. When receiving gift certificates, they are accounted for as an asset, gift certificates receivable. Let's consider the journal entries. Sold merchandise worth 1,000 yen, received 300 yen in gift certificates, and 700 yen in cash. The journal entry is debit, gift certificates receivable 300, cash 700. Credit, sales 1,000. We received gift certificates receivable and cash, so we debit these accounts. We sold merchandise, so we will credit sales. Later, exchanged the 300 yen in gift certificates for cash. The journal entry is debit, cash 300. Credit, gift certificates receivable 300. Since the gift certificates receivable have been used up, we will credit them to offset and eliminate the balance. The fifth content. Guarantee deposits. When renting a store, it's common to pay key money or a security deposit. These amounts are refunded upon termination of the lease agreement. As they are refundable in nature, they fall under asset accounts. Let's consider the journal entries. To lease a store, a 1,000 yen security deposit was paid from the savings accounts. The journal entry is debit, guarantee deposits 1,000. Credit, savings accounts 1,000. We have paid the security deposit, and since there is a possibility of getting this money back later, we will record guarantee deposits as an asset. Let's now look at the journal entry for when the security deposit is refunded. Upon termination, the security deposit was refunded and deposited into the savings accounts. The journal entry is debit, savings accounts 1,000. Credit, guarantee deposits 1,000. Since guarantee deposits disappear, it is recorded as a credit. Thank you for watching the video. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. The higher the number of likes, the better the next video will be. Your comments are the driving force behind the creation of my next video, so please feel free to leave them. Thank you very much in advance. See you next time.